Good afternoon and welcome to this edition of Finweek Money Matters, the show that helps you manage your finances. I'm Demisho Greater. Along the show today, we take a look at Nampaq, and the company's share price has been under pressure after it missed its full year sales and profit estimates. We'll have Moxima Gama telling us a bit more about that. Then we get an economic forecast on South Africa, and then we'll also review the year that has been 2014. But before we get into all of that, please do send us your comments or feedback to moneymatters@abn360.com. Our time now for us to take a look at the cover story of the week. Well, with me in studio now, we have Jana Marais, and we'll be taking a look at the biggest stories during the course of the year. We had the mine stoppage that lasted 5 months, which was the biggest in South Africa's history. The death of the Bloemfontein teacher, that's Pierre Koki, in Yemen, that happened in December. And in the latest issue, journalist David McKay takes a closer look at the mining industry and what we can expect in the year ahead. And also we have contributor Thandisi where Mahlujana unpacks the 2014's biggest PR blunder. But again, as mentioned, Jana Marais is here with us to share her thoughts on some of the biggest events that have definitely impacted her. Jana, thanks for making the time to join us. Perhaps let's start with highlights for you. So definitely a time for us to reflect. So should we start off with the good news?
Yes, I think so. Well, I must say we had a very tough time in the office. We were just chatting about it this morning, trying to think what were really the big stories that made us, that were positive. And it was quite hard to find good news this year. It feels like it was just a lot of bad stuff that happened. But I think personally for me, I would say the highlights, from an economic perspective, I think there was a recent World Bank report that came out showing to what extent cash grants and government grants have been helping to lift people out of poverty in this country and to narrow our inequality. And I know, there's a lot of debate around the sustainability of it and all of that, but there's also a scary statistic around it. We've lifted 3.6 million people out of extreme poverty, which is, I think, fantastic news. But the sad part of it is 16.5% of South Africans still live in extreme poverty, which is measured as earning less than $1.25 a day. So, I think that's something we should feel quite optimistic about. I think the other thing that I quite enjoyed is the EFF and just the colour and the debate that they've brought to the political agenda. And I think we'll see a lot more of that next year.
And it's always great to have more opposition, whether it is for a good or bad cause. Doesn't matter what people's opinions are. Maybe it's a good thing that people have varying opinions from what we've been used to. We've been talking about the good news. Let's move on to not so good news. There are plenty to choose from.
No, again, it's really hard to choose. I think just from an international perspective, I think Ebola has been a terrible story. I think just in terms of the rise of terrorism, I don't know if it just feels like it's been all over the news this year. But ISIS, Boko Haram, all these things have been really depressing. Personally, for me, I felt the platinum strike for the first half of the year, that was really something that...
Did it perhaps maybe get you thinking that we may be looking at another Marikana when that happened and it wasn't for an extended period of time? Or did you get a sense that maybe we have learnt our lesson?
No, I definitely don't think we've learnt our lesson. I think people are making the right sounds, but even if you look at some of the testimony in front of the Farnham Commission into the Marikana massacre, and it just feels like nobody's taking responsibility. London would deny, police would deny, but more importantly than that, I've spent quite a bit of time during the strike in the Platinum Belt, and you don't really feel on the ground that people's lives have really changed in any significant way. I'm sure there's lots of projects underway to improve things like housing, but really you can understand why people were so frustrated and why they were willing to sacrifice so much to go on strike without pay for 5 months. And I think the effect of that we will feel for some time.
While we're staying in the mining sector, regulation has been huge there. A lot of investors are still saying it's still smokes and mirrors. Nobody really knows what's going to happen. Are you also reading it the same way, or are you perhaps maybe seeing some clarity that some of the analysts and CEOs and investors are not seeing?
No, I think, the thing that depresses me about that is I've been covering the mining sector since about 2008, and that is always the issue that people bring up. It's always around there's no certainty, and mining is a long-term game, and you need to be able to really make decisions that's going to, you know, need to have a 20-year view, or longer even. And I think that is very frustrating, is we have these massive natural resources in South Africa, and the policy space is still not where it should be to really invite people in. And of course, now we just see with what commodity prices have been doing,
Yes.
It's going to be even harder to attract investors. And it still remains a very key sector for job creation, particularly.
Well, Jana, we have a spot for one more bad news or good news, whichever one you want to swing it. What else caught your attention?
What I think is going to be one of the key things for next year, and I know we'll talk about that later as well, but I think Eskom is a real big issue. And I mean, we mustn't get tired talking about it too soon, because it's going to be on the agenda for some time. And I hope that this new task team that government is, you know, putting together, you know, that there will be some progress and that they will be able to fix some of the things. But I really feel business and households will have to find ways to deal with electricity issues next year.
Well, I'm interested to see whether that turnaround strategy with our Deputy President Cyril Ramaphosa heading it will end up in South Africa being in a better position. That was Finweek editor Jana Marais. Now it's time for us to take a look at that punt of the week. The share price of packaging group Nampaq has been under pressure after the firm missed a full-year sales and profit estimate. It is looking at selling low-margin businesses in South Africa and instead investing in higher margin opportunities on the rest of the continent. Joining me to unpack this and give us some more insight, we have Moxima Gama, who joins us from our Cape Town office. Moxima, thank you so much. Before we get into all the different dealings that Nampaq is currently embarking on, give us a sense of where Nampaq is situated in the South African packaging industry.
Well, Nampaq, well, I should say I'm a bit excited. I was a bit happy about it from our last call on it, which it had broken out of a symmetrical triangle, so it's kind of met that objective. But it's still bullish, but in a channel, which can be a bit frustrating for a lot of investors. It means it's just kind of confided in a specific channel, although it is bullish, but there's a lot of volatility, particularly because of the weekly RSI also then trading in that symmetrical triangle. So what that is telling us that we should at least anticipate a bit more volatility in Nampaq. Look, it is a #1 leading packaging industry in South Africa, as well as and it's leading its way in Africa, and it seems like they've gone back to the drawing board to improve their results, but I think it will bear the brunt of the fact that it's in the Indy 25 index, and I'm not quite a fan of those shares, though I do see a bit more upside if it does break out of this bull channel and form a new uptrend. But at this point, I just, if you are heavily exposed, you should brace yourself for a bit more volatility until we reach a breakout either way.
Moxima, you mentioned that they have gone back to the drawing board to try and look at ways to boost their results. The current ones that we had, they really didn't meet market expectations when it came to profit and full-year sales. Perhaps where are the other pressure points here that we need to be aware of?
Look, they're grappling between the raw material costs, which are really that's what they would be grappling with, and just the economic structure of the country. I suppose that's why then the diversification in what they're doing and going to other countries up in Africa. It's to beef up their portfolio, which I think is quite a good strategy for them, because South Africa just seems a bit too saturated, or the southern part of Africa seems a bit too saturated. So moving up is quite a good decision, and I think that will then push it forward, or it will give it, there is more leeway for it to go up if it does break out of the channel. That's if it trades above the 52 Rand level, we could see at least another 19% advance. But like I say, it's in a confided channel. Although it is bullish, we will see a bit of volatility. I would just strongly suggest if it goes anything below 38, you would reduce your position, because that could then start a new bear trend with a roughly 19% loss. So just be wary of it. It is one of my favorites in the Indy 25, which I think a lot of the stocks there are overextended, and there's just no more leeway for them to go up. Nampaq will probably outshine them.
One of the trends that we've definitely seen this year is a lot of South African companies moving outside of the borders and really making investment into the rest of Africa. What do you think the value is that can be derived in terms of how much more can we see in terms of their margins from Nampaq in the rest of Africa versus what we've seen here in South Africa?
Well, with the development that's happening in Africa, just in general of income-based or per capita, there seems it's growing. And like I said, South Africa's a bit saturated, and because being in the industry for so long makes them one of the best, it's probably it's an attractive proposition to a lot of the African countries, which will see them. I mean, the margins now we're reducing quite a lot, and with them going up in Africa, they see at least a 20% gain in the capital, which is not a bad investment. So it does make it quite a good long-term investment, but we should just be wary at this point that it could do a bit of a correction if this bull channel does give in. On the flip side is, like I said, above 52, we could see quite a rapid advance. But yet again, I think that would be one of that would just be quite a last kick before we see a correction. But it is definitely looking much better than a lot of the industrial stocks or even the basic material sector.
Moxima, thank you so much. As always, giving us some insight there on some of our stock picks. Thank you to our Finweek contributor, that's Moxima Gama. Moving on, falling oil prices. Yes, that has been the theme over the last couple of weeks. Load shedding and a lightening of fiscal policy and international trade relations will all have an impact on the South African economy. This week, Matthew Sharratt, that is the South Africa economist at Merrill Lynch, discussed his view on the GDP growth rate, inflation and interest rate expectations for next year. Let's take a look at that.
To say that the economic outlook for South Africa will be challenging next year may turn out to be something of an understatement. Certainly when you look at the global environment, there's much uncertainty we expect over the coming year. On balance, we at Bank of America Merrill Lynch do expect the global economy to improve to a 3.7% growth rate, supported by a recovering US, stabilization in China, and frankly inertia in the Eurozone. But the key dynamic for next year probably will be around the start of monetary policy tightening by the Federal Reserve. And for a large twin current account deficit country like South Africa, which requires portfolio inflows, this could be a period in which the rand could come under significant pressure. But specifically in terms of how we think about the outlook for South Africa next year, we see three key themes. Firstly is that we expect, from a domestic perspective, pretty much subpar economic growth. Gone are the heady days of the 2000s where we were supported by strong terms of trade and very robust credit growth. We think now South Africa can probably grow in terms of its trend pace around 2.5%. But even relative to that, we think growth might be somewhat softer next year at 2.3%. And there are plenty of headwinds, I think, that the economy may face. Most importantly, electricity load shedding, which may be a significant headwind over time if this persists. But also we have concerns about labor unrest and general slowness in infrastructure investment. The second theme that we are also focusing on is inflation. Broadly, we expect an inflation roller coaster over the coming year. Certainly inflation is likely to fall very sharply over the coming months. We expect a trough of 4.2% in April next year on the back of sharply lower oil prices. But then as we go through the remainder of the year, on the view that oil prices stabilize around current levels and broadly start to move up gradually to an average of $77 for Brent per barrel next year, we expect to see significant base effects driving up inflation in the second half of the year. We think inflation could end 2015 right back up at 6%. So there's not much respite, we think, for the Reserve Bank when you look at a two-year view on inflation. The final theme we're focusing on South Africa concerns the Reserve Bank. And basically we think that their path of interest rate normalization is probably going to be unavoidable. Certainly in the first half of the year, as I've indicated, as inflation falls quite sharply, the Reserve Bank appears to have a period in time in which it can probably sit on the sidelines if Rand behaves itself and isn't subject to extreme weakness. But looking further into the second half of the year, as Rand comes under pressure, as we believe the Federal Reserve starts to hike rates in the third quarter of next year, and also as inflation shows signs of turning around and moving back up towards the upper band of the SARB's target range, we think the Reserve Bank will start hiking rates again, and we look for the next 25 basis point hike in July next year. We think that by the end of next year, the repo rate might be a cumulative 75 basis points higher at 6.50, and we wouldn't rule out further tightening into 2016. We've penciled in another 75 basis points to take the repo rate to a peak of 7.25%.
Some interesting insight there. But we're going to be taking a break now, but when we come back, we'll be reviewing the year that was and also going to be looking ahead, so don't go away. Title to Global Mobility Services and Employment Tax Advisory. Oh, hi, Christine. Beatrice just wants to change the title, please, to Global Mobility Services. Actually, I can actually ad-lib that, it's fine. And Employment Tax Advisory.